Hello everyone and welcome to ICM's midday session. We had in the morning a couple of economic indicators coming out from the United Kingdom, among them average hourly earnings, unemployment rate and the claimant count, which all came better than expected, and this is just a little bit key factor behind the strength of the British pound against the United States dollar. We saw the pound earlier just weakening a little bit, moving away from the top, especially against the dollar, but now it's been recovering for a while. So in terms for other major currencies, we just saw a little bit of dominance for the dollar, but now we're in a bit stable mood. We start with the euro dollar, which was falling earlier, dropping to 121.07. Now we're back almost towards 120, It's not like the market is just trading inside the previous range. Nothing much is happening. We're trading below the 100 and 200 hour exponential moving average. There is no clear setup on the euro dollar until now. We had this trend line combining the previous bottom. The market dipped, the prices dipped below the trend line. Now recovered a little bit, but this wasn't like a clear sign. Even you can just draw a parallel line to this trend line. You can see this possible flag that we're trading in. However, the breakout took place, but wasn't significant, and then the market is just stalling inside the smaller range. So you can do is just highlight on the bigger picture. You just can highlight some wider a wider level or a wider range: 121.85, 122.20, and from the bottom 120.70, 120.50. This is the key area that we're currently trading in. So we could be trading on the sidelines or just trading any breakout on possible factors that could come in the market. So this is for the euro dollar trading the British pound against the United States dollar. Also, you can see on the hourly chart this dip that took place. We had this trend line that we drew last week. We were monitoring this trend line. So if you just draw the bottoms 1, 2, and you can see how the market exactly dropped towards this line, and then it's moving backward to the upside. It's moving back again to the upside. So what could be in terms of possible levels, a key zone remains 137, 137.45 continues to be a key level, suppressing any moves to the upside. In order to just, if you're bearish on the pair, we need definitely to clear below this trend line to break this trend line, which could just drive us lower towards 35.15 and even lower. The United States dollar against the Japanese yen, we're still in this sideways movement. You can just draw a trend line combining these tops. Yesterday we had this trend line. However, we had a little bit of a breach, so you can just draw it that way. And also you can just draw the bottoms by this possibility. So you can see this, you can call it a flag, wedge. It's a possible formation, similar formation of a market moving to the upside and then consolidating or trading slightly in a sideways. We could be waiting for any break above the trend line or above 104 in order to turn bullish again on the dollar against the Japanese yen. First target could be 104.40 and then 104.80. While a failure here and drop back below 103.60 could just add to the losses, and we could be falling back towards 103.15. The United States dollar against the Swiss franc, we're still trading inside the same range between 89.20 and 88.40. We've been highlighting 88.20 as a possible extension for this target. So this is the target that we're currently trading in, as long as we don't have any key drivers for the pair. The Australian dollar against the United States dollar been lower earlier due to a little bit of a drop in risk sentiment. So and we know the Australian dollar is very sensitive to risk. So this is what we're witnessing, almost similar formation to what we saw on the dollar yen, but this is a bit stable. So the market was moving to the upside, and then we've been consolidating inside this range since the beginning of January, and we're stuck between 76.40 and almost 78 levels. So we need definitely to have a breakout in order to move to either ways. But we can also just come closer or zoom in a little bit and just to draw a trend line combining these previous tops and just wait for any break above this trend line could just drive the prices higher again towards 77.70. The New Zealand dollar against the United States dollar. This yesterday we talked about the possible double inverted head and shoulder formation, and this is what we could be possibly moving to. You can see the double shoulder, double head, and double shoulder again. You can just draw a trend line combining these tops, which could be the possible neckline, and wait for any break above it. If we were able to move back above 73, 72.20, 72.40, we could be poised to retesting 73.15. As long as we're below this key area here, 72.40, we could be falling again. A key or minor support for the moment is 71.65, and the drop below 71.65 could just drive us lower towards 70.90. The US dollar against the Canadian dollar still trading sideways on a bigger pattern since the beginning of January. We've been trading between 126 and almost 128. We're still undecisive on the pair as long as we're just trading inside this range, failing to break above 28.20, and from the bottom the drops were capped by just drawing a trend line combining these bottoms. So this is the possible formation that we're trading in. See how the market was reacting with the 200 H4 exponential moving average. So expect any clear breach above this moving average. It could just lead to another run higher towards 28.40 and then an extended target towards 29.50. Gold prices has been trading in a tight range, failing to move either to the upside or the downside. We're just stuck inside a key range between 1875 and almost 1800. You can just extend this range for a certain break. So in order to just be more specific on gold prices, we need definitely to have a close above 1875 or a close below 1820. Silver prices, also similar formation to what we're witnessing on gold. The range is narrowing a little bit, so we're stuck between $26 and $24, and this could just the breakout of this range could just lead to a directional move. WTI oil prices have been finding support near the 100 H4 exponential moving average for a couple of times, 1, 2, and you can see the dip the past couple of days and how the market is moving again to the upside. This is just amid some optimism over how OPEC producers or oil producers will be anticipating or will be offsetting any drop in demand. So any move or any break above 54 could just drive us towards $56 a barrel, $56.50, while the reversal here and the failure and the break below the 100 H4 exponential moving average could drive us lower towards the 200 H4 exponential moving average, which currently sits slightly below the $50 mark. Also, you can move to the Dow Jones. You can see here how the dips towards the 200 H4 exponential moving average were bought a couple of times, 1, 2, and 3. And this is the recent pullback that we are currently seeing. Moving to the hourly chart, you can see it on a bit clearer mode. You can just highlight this range between 31,300 and 30,600, 30,550 as a key level or a key area. As long as we're inside this range, we could be trading sideways. Moving above 31,270 would take us towards the first target of 31,650 and then the second of 32,100. While any disappointments on the stock market, especially with the earnings anticipated, could just weigh on Dow Jones again, and we could be retesting 30,500 again. This is all for today's session. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this session, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. This is all for now. Thank you all for joining.